Welcome to Market Matters. I'm Khoo Chong and I'm joined as usual by the lovely Charlotte Chong. Now, I hope you're sitting comfortably, Charlotte, because we're about to embark on a furniture segment. Firstly, the company's in the news, and the company is called SWS Capital Bhd. Tiny company, closed the day at, closed the day 8% lower to 114. Now, this is one of those smaller boutique furniture makers. They do a lot of leather upholstery and wooden furniture makers. The news is that they shelved plans to raise about 11 million ringgit in a private placement. Announcement didn't give a reason, but the news flow did, because apparently the chairman, Tan King Tai, no, in fact, one of the major shareholders, not the chairman, had tried to block, in fact, did succeed in blocking the placement.
Now, what happened was they have actually successfully blocked this plan. Private placement raised 10.9 million. And this plan actually proposed to issue up to 10% of the company's issue and paid up share capital. And they intend to actually expand the business activities with this amount of money.
Yeah, this is a bit bizarre because the furniture sector is going through a sweet spot right now.
Correct.
Export earners are making a lot of money. They're getting an extra boost from the US dollar earnings. We've seen companies like Latitude, Lihen. We're going to be talking about Huat in a few minutes. You know, it's right now in a sweet spot, and for the major shareholder to try and block a placement that is going to raise 11 million ringgit to buy a new plant and to buy new equipment to make new furniture, that's a bit bizarre.
I think that's also because of weak market condition, and that's probably one of the key reasons for, you know, people, their lack of interest to buy into the company, and also because we are not very certain of the recovery of the US market, because this company actually exports some of its furniture to the US market. Company actually stands to benefit from weaker ringgit. Export accounted for about 73% of its revenue in FY August 2014.
Correct. I think you got a point there, because if they had not boosted production capacity by now, maybe they're a little bit too late to the game. And they're afraid maybe that after having spent all this money, building it all up, and that's when the market starts to sag. The other reason, of course, is the 13 million new shares that would have been issued as part of the private placement would have been potentially EPS dilutive, because it's a very small company, just about 60 odd million shares in circulation. So, of course, roughly from the 10 million, the 11 million they were going to raise, you're going to be spending about 60% of that to build a new factory in Johor, which is not going to happen. And then they're also going to be buying some new equipment to buy, and it's, of course, raw materials, comprising leather, board, veneer, and lumber, and as well as the admin expenses for that exercise. So that is not going to happen anymore.
But I think down the road, probably next year, they will, you know, again raise funds for its business activities, because they require more floor space to store the products manufactured and house additional equipment for
Exactly. So if not sooner, later, if not later, then sooner, right?
Else they wouldn't be able to fight with the big boys in the market like
Huat
and Latitude and all that.
And then maybe they get bought up, right? So who knows? Okay, so to conclude, the three reasons, they scrapped the private placement. This is a company called SWS Capital. They scrapped the private placement, which was supposed to raise 11 million ringgit. One of the major shareholders, led by Tan King Tai, he had sought legal measures reportedly to prevent the company from implementing the private placement, and probably a weak market condition, thirdly, was a key reason for the lack of interest from the private placement. Let's move along to the second furniture maker on our horizon. Now, this is a company called Huat Resources Bhd. They closed the day at 187, up by 2.2%. This is the country's number 3 furniture maker. They sell stuff in the country under this brand name of AT Office Systems. They actually don't have natural wood or lumber in the furniture. They actually use veneers and solid and reconstituted wood panels in lieu of timber.
So IA Insider actually like this stock because they say that these guys were the one riding on US housing recovery. Like gloves, these guys are due to benefit from being export-oriented, namely the strong US dollar.
Of course, in fact, last October, Insider Asia were quite prescient. They selected 4 furniture stocks as proxies to the furniture export boom, and all of them have done really well, but none more so than done more well than Huat, because 224% since first recommended, followed by Home Rits 111%, Lihen 126%, and Latitude 104%. So
if you compare with
well done, Insider Asia. That's all I got to say.
Yeah. Right? So valuations are also attractive relative to its positive sector outlook, earnings visibility, and dividend upside. Stock is trading a shade higher than the sector's trailing PE of 10.8 times, with the market cap slightly below its trailing 12-month sales.
63% of revenue is coming from the US, 24% from Canada, and the rest of it from UK, Malaysia, Singapore, and the Middle East. So if you look at it combined, 87% of that from North America. Not bad, because the Canadian dollar and the US dollar fantastic levels against the ringgit.
Now, the company has manufacturing plants in Vietnam and Malaysia, but they have actually stopped their China operations in 2013. Local operations have undergone a rationalization exercise focused on higher margin office products. I think not just this company is focusing on higher margin office products. I think a lot of the factory furniture maker in Malaysia, they have actually focusing on their higher margin products, isn't it?
Yeah, so to conclude, I mean, just one more thing to note, because this is what Insider Asia says, because unlike Home Ritz and Lihan, who operate in a rising cost environment in the shape of raw materials, rising costs, labor shortages, Latitude and Huat have actually taken the bull by the horns and been quite proactive in terms of reducing the cost base. So both Latitude and Huat have shifted most of their labor-intensive production to Vietnam for the cheap labor and attractive tax rebates. Whereas in Malaysia, they focus on the higher margin office products. And that's actually very good for them from an earnings perspective.
I read it from Insider Asia as well. About 60% of its sales are from Vietnam, are from furniture made in Vietnam itself. And they expect earnings for the quarter to be boosted by higher shipment from the Vietnamese arm, favorable exchange rates, and margin improvement for the Malaysian operations.
So get this, if Janet Yellen raises interest rates tonight, the US dollar versus the ringgit might go up even further against where we are now at 4.25 or 4.3. And all hell's going to break loose, is all I want to say. Right?
Yeah, we will probably expect all these furniture maker or probably gloves maker, their stocks to be going up as well.
Absolutely. So to take it all home, three things in terms of where Huat sits. Insider Asia likes the stock because valuations are attractive. They're trading in a shade higher than the sector's trading PE of 10.8 times. In the last financial year, 2014, dividends total 4 cents. That's a mere yield of 2.2%. But then you've got all that upside to go on the capital side. And Insider Asia, thirdly, expect earnings for the quarter to be boosted by higher shipments from the Vietnamese arm and favorable exchange rates. So that's a wrap for our furniture sector watch from SWS Capital and Huat Resources. Thank you for listening and thank you for watching. If you want to get more, go to edgemarkets.com. Pick up the hard copy from all good newsstands around Malaysia. And that's it for us for tonight. Thank you for watching. Good night and good luck.